Hey everybody, well, here's the weekend, and let's catch up with the markets. I'm going to start off with something very crude, and I don't mean crude like impolite, I mean crude in terms of granularity. This is a monthly chart of the spider, and it illustrates something that you already know, which is that the market's basically been in like go, 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 up lately mode. We've got November, December, January, February, March. And it seems like a long time ago where we had this kind of two-way market going on. And what we're experiencing now is kind of reminiscent of the insane days of 2020 and 2021, where it was just green pretty much month after month after month. And then the oh so delicious 2022 came in, which came to a screeching halt on that fateful day, the low of October 13, 2022. And since then, it's been up, and most recently, it's been up without a single red bar in sight. If we go to a weekly, and I've turned off the drawn objects here just because we don't need them, just for cleanness, we can see more plainly how annoyingly consistent things have been. Because, back in the day, kind of a two-way market, ups and downs, ups and downs, ups and downs. And those ups and downs persisted until October of last year. And then it's just been absurd. It's been just like straight up with just the most temporary and minute, pitiful exceptions. Here was the complete fake out from the first couple of days of the year. And then this puny little thing, kind of sad. Which doesn't even deserve to be read. So it's been an interesting market, to say the least. But let's look at the ETFs in general. And as always, some will blow right past, like this one, and others spend a little time on. So yeah, DBC, not much to say on that one. It has eased back to support here, so maybe that's getting ready for another push higher. The diamonds... and of course, Wednesday was the big day for no particular reason. Powell's words sent people into a frenzy. And so on Wednesday, we had the big jump, and this cute little base was complete. And on Friday, which was the only decent day for me for the week, we gave up all of Thursday's gains and a portion of Wednesday's gains. So if it'll require a break of this level to have any faint wispy hope that a two-way market is back. It hasn't happened yet. Here's the EEM, which was down 0.75% on Friday, which I appreciate. This remains my biggest position. The sine wave is not great, but I'm going to leave it there for now because it's also not terrible. But we had the highest level in almost 2 years, Thursday at the open, and luckily it reversed that and sank some on Friday. But it's going to take more than this to get that sine wave really cooking. So again, biggest, not by a long shot, but this is my biggest position. EFA, kind of a bore, right at lifetime highs right there, above even that long blue trend line. China down again as usual. This right triangle remains completely intact, and so this peak was back on the 13th, and it's stumbled since then pretty badly. The miners, GDX, let me zoom in properly here. Yeah, these guys peaked on Thursday, and essentially this whole series of, I'm almost wondering, let's kind of say goodbye to this one and just illustrate a little bit better what's been going on. Like so, yeah, it's not great, but what I'm trying to show is the lower lows and the lower highs. So this is not, especially since gold was at record highs, this is not healthy, at all. Gold miners remain a very hated sector, and as I've mentioned, I've got 48 individual miner stocks. From time to time, I'll look at the list looking for anything good. It's all junk, it's not like great short ideas. It's just junk, and not good, not bad, just kind of there. And the GDX is reflective of that, because it really, this is just a big fat mess, to be honest. And obviously the junior miners, the same can be said. And I'm going to, goodness, it's not even worth drawing. Here's gold, GLD. And we had a lifetime high at the open on Thursday, but it fell on Thursday and fell more today. So we're essentially where we were back on the 7th. All this really has netted nothing. And of course, if the day comes that we slip below this level of the screen, then gold is once again in really serious trouble. As it is now, it's a question mark whether this entire thing is a hardy base from which it will launch higher, or if this is just the umpteenth fake out that we've seen. IWM is my second position. I've got 3. This one, and they're all just long puts. They're like September and November. They're way out in the future. And this is, again, a sine wave, which is kind of iffy. I would say, though, that this was sort of sloppy back here, and it wound up going the right way, as is this one right here. And zooming in, Thursday was the peak on this, a nice reversal, 1.4% on Friday. And just, again, we really got to bang through this. And if we can break, it seems like science fiction, but if we can break the low on Tuesday, that would really start to make things interesting. IYR, big fat mess. IYT, FedEx didn't really help here. FedEx went up an incredible amount, and the transports were down 0.18%. So clearly not enough to make a difference there. So IYT looking pretty ragged. S&P 100 ETF, that is the OEF, still neatly within that ascending wedge with Thursday as the high. Here's the cubes, collapsing by a penny, apparently on Friday. And as with the other items, lifetime high on Thursday and just kind of hanging out. Friday not doing much of anything. SMH, the semiconductors, same deal. They're above, they're in the upper half of this long-standing channel, but the glory days seem to have ended on the 8th. And wouldn't it be interesting if NVIDIA pooped the bed when the earnings came out? That would change the entire tone of the market, but that's a ways off. In fact, I'm curious. I'm just it's going to be a long time from now, but I'm a little bit curious when earnings are. So let me just take your valuable time and let's find out. We'll just stretch this sucker. Goodness gracious, is the earnings not listed? Oh, there it is. Yeah, it's not till a couple months out, late May, way out there. So let's make this a little more normal looking. Joink. The spider we've sort of looked at already, but just to take another peek, the most important element of this chart is this dashed line. This ascending channel goes back for 15 years, and in an amazing way, and it could be just dumb luck, but I don't want to believe it. In an amazing way, we're coming right up against this dashed line, which is the midline. And the last time we tagged that sucker was in August 2022. Fell away beautifully, and here we are again on Thursday. Just let's stretch this bit and just see what it looks like. Yeah, no, you can see quite plainly. That was a really lovely tag of that. So we will see. TBT boring, TLT actually surprisingly boring. Really not much to say about that. Although I will say if we can break this level, that would be very helpful on the bearish side. Crude oil, complete and utter bore. XHB, really no change there. You can see its position relative to that long-term channel, so kind of similar to the spider in that respect. The XLE, and let's remove this stretching that we're doing. XLE, lifetime high Thursday, gave back a little down Friday, meh. Financials. It's a shame that the latter part of the ETFs are so boring, but they just are. They're all clustered down here at the bottom. So this is dull. XLI, the industrials, unbroken wedge there. XLU, this is my third and final position, and I've written about this quite a lot lately, so no need to get into that too much, but I'll just say 64.49 is kind of a yellow light, and the oh my god, I can't believe this red light would be up here at 65.54, so got to stay below those levels. XOP, oil and gas, call it a triple top if you want. It's exhausted itself back there again. And finally, XRT, which is an object lesson in how sine waves can basically cut loose, blasting away from its own sine wave and up to a couple of year high. And that, my friends, is that.